All right, welcome to Talk Tickers, where we slice and dice the most important earnings calls. Today, we're jumping right into Enphase Energy's Q3 2025 results. Let's get to it.
So on the surface, Enphase put up a really strong quarter. I mean, they beat expectations, posted some record numbers, but then, boom, the market just hammered the stock, a brutal 15% sell-off the very next day. So what on earth is going on? Let's dig in and find out.
Okay, so first things first, let's talk about the actual quarter they just reported. And really, on paper, the numbers looked fantastic. I mean, they beat what the analysts were expecting pretty much everywhere you look. All right, check this out. Non-GAAP EPS, that's earnings per share, came in hot at 90 cents. The street was only looking for 62 cents, so a huge beat there. Then you've got revenue hitting $410 million. That's their best number in 2 years, by the way. And what drove that? Record battery shipments and really strong demand right here in the US. And that non-GAAP gross margin, almost 50%. That's a really solid number, especially when you know they're dealing with tariff headwinds. You know, the CEO himself, Bodry Kothendaraman, he gets on the call and says, we had a good quarter. And he's not wrong. So this is the big question, right? If the quarter was so good, what in the world spooked investors so badly? Well, the answer isn't in what they just did. It's in what they said they're going to do. It's all about the forward guidance. And this is where it all falls apart, really. The market looked right past those great Q3 numbers and fixated completely on the outlook for the future. I mean, just look at this drop-off. They just posted $410 million in revenue, and now they're guiding for Q4 to be somewhere around $330 million at the midpoint. That is a massive sequential haircut. And that beautiful gross margin, they're expecting it to shrink by a full 5 percentage points. So yeah, that's a huge step down, and that's what has Wall Street running for the exits.
So management tried to explain this, right? They gave a couple of key reasons. First, there was this big, almost $71 million safe harbor sale. Now, what that means is a customer basically pre-bought a bunch of stuff to lock in tax credits before they change. That sale was supposed to be in Q4, but it got pulled forward into Q3. So that pumped up Q3, but leaves a hole in Q4. Second, they're deliberately shipping less stuff to their distributors by about $45 million. They're trying to clear out inventory in the channel, which is actually a pretty smart move for the long run, but man, does it hurt the numbers you have to report in the short term.
And if that wasn't enough, you've got this wild story of two different markets. The US, it was on fire, up 29% from the last quarter, super strong. But that strength was totally wiped out by what's happening in Europe, down a staggering 38%. The main culprits seem to be France and the Netherlands, where a tough economy just means fewer people are shelling out for new solar panels right now. But wait, it gets worse. Management then started talking about early 2026, and they basically told everyone to brace for impact. They're signaling what they call a cycle trough in the first quarter of 2026, with revenue potentially cratering all the way down to $250 million. And why? Because a major U.S. solar tax credit, the 25D, is set to expire. That's been a huge driver for people to go solar, and it's going away. So what you have now is this classic Wall Street showdown. It's the bull case versus the bear case. On one side, you have management talking about their long-term vision and innovation, and on the other, you have the market, which is laser-focused on all these scary problems right in front of us. So let's talk about the bull case first. What are the optimists hanging their hats on? Well, it's all about innovation and new markets. Management is really pushing their next-gen products, new batteries, super advanced microinverters that they think will be game changers. Plus, for the first time, they're jumping into the commercial solar market. That's a huge new playground for them. And the thinking is, if they can just get through this rough patch, the second half of 2026 could see a big rebound, with interest rates hopefully coming down and electricity prices going up. Okay, now for the bears. They're looking at this and saying, yeah, that's all great, but what about right now? They see that 25D tax credit expiration not as a hurdle, but as a cliff they're about to run off of. They see those tariffs just continuing to eat away at margins, and they're looking at Europe and just not seeing any light at the end of the tunnel. So from their perspective, Enphase has to execute absolutely perfectly on all these new products just to fill the massive hole that's about to be created. That's a lot of risk. So you've got these two totally opposite stories. The question is, what do you do with it? How does this translate into a potential trade? Let's get into it.
All right, this is the next call. Here's our take on Enphase and where we see things going.
So our rating on Enphase is market perform.
Look, let's be clear, this is a best-in-class company, a fantastic operator. But they are sailing directly into some massive industry headwinds right now. And even if those storms are temporary, you can't ignore them.
Here's our prediction. We think this stock is probably going to be stuck in a range, kind of trading sideways until at least the next earnings report. The market is just going to be in wait-and-see mode for that Q1 2026 trough guidance. So with that in mind, here's an idea for a trade. It's a bit more advanced, but hear me out. Consider selling cash-secured puts with a strike price way down below the recent lows, say around 25 bucks. Now, what does that mean? It basically means you get paid a little bit of money today for agreeing to buy the stock at that much lower price if it ever gets there. It's a way to define a really attractive entry point into a great company during what might be the absolute peak of pessimism, right before things could start to turn around in late 2026.
So that's our take on Enphase. As always, remember, this is not financial advice.